What is good, everybody? I hope you all had a fantastic weekend. It's a very interesting spot in the markets as it's really just stagnating right now. And so this video is probably going to be a little shorter because I'm just not going to waste time reiterating things I've already told you plenty of times. But I'm going to show you some stocks that I'm looking at and waiting for the big drop that's going to be coming at some point, and just some things on oil and natural gas, which I think are worth pointing out. So with all that being said, we're just going to get into it. Make sure to share the video some love, give it a like, and subscribe, and let's get into it. So, it's finals week for me, so I've really just been spending a lot of time with finals. And quick note, I'm going home back to California next weekend. So, after that, it's going to be an interesting few weeks with the video process. I'm going to be a camp counselor during the summer, so this summer I'm probably not going to have videos out for a while. It's going to be an interesting process. We'll just see how it goes. Just kind of go with the flow. So with all that being said, we're just going to get into it. So to start off, we got oil here. Now, if you remember a few weeks back, we were looking for oil to get a big pullback into this blue box, and it completely overshot it, which I was not expecting at all because I thought this was a 5-wave development, which 1, 2, 3, 4, 5, and then after that I was expecting a pullback into that zone, which we got, and it blasted through that. Now, it was just today that I realized what that actually might have, like, what that reason might have been for. So if you look at this fib extension here, we finally hit the 1.618. So previously we almost got there, but we didn't quite hit it. You can see that there's a little space, and this time we hit it. So this could potentially mean that this is a 5-wave development to the downside, starting from like the all-time highs, or not the all-time, like just this high back in early 2020 when all the war started, all of that stuff. So it's very interesting. If this is the case, I would really love to see this because I would definitely be taking a short position. Now, the criteria for me to uh, still want to short it would be that we stay below the 50%. So the 50% here and that wave 1 low. So if it goes any higher than 94, like that 94 region, it's probably going to go higher. But if it stops there, if we definitely get up into this range, it's an incredible risk reward to short up there, just because, I mean, if you get up to around 94, you can put a stop loss like not that far away, and then if that doesn't hit, you're probably going to see a nasty decline. And just from a glance, there's some liquidity that might need to get tested in this region, as well as this is just a region I've been looking at for a while. So keep your eye out for this structure here. We hit the 1.618, which is kind of that's a characteristic of wave 3, and I don't really see, I mean, yeah, you could argue that there's like something right here, but I think this might be the case, so this is what I'm looking for. For now, very strong bounce off of that level, and then I think there's still divergences here. So, yeah, triple divergence. Triple divergence. So we're just gonna take a quick look at the weekly, see how that's looking. Same thing, massive divergence on the weekly. So keep your eye for this kind of structure. And this is another thing I was looking at. There are a lot of short positions in oil, and every time we kind of got down to kind of like the ground zero of like net short positions and net long positions, there was a massive rally in oil, and we're going below it, which is something that's kind of interesting. I'm not really sure how I want to interpret that, but yeah, this could easily, very, very easily mean we're going to see a really fast and violent squeeze, which could be that wave 4 before going even lower. So keep your eye out for a rally. It's been a tricky spot. I haven't traded oil these past few weeks just because it's really hard to read right now, but this is what I would love to see because it would be very clear to me. It would be a very obvious structure and very easy and simple to play. So that's what I have to say for oil. Keep an eye on it. Natural gas. So if you remember in last week's video, or maybe that was 2 weeks ago, I think it was last week's video, we were talking about we were up here and we had this gap down here, and I was like, okay, all gaps on natural gas usually get filled, so I was expecting something like we fill that gap and then we come right back up above it. You can see that this drawing's like, that's from last week, and we popped back above it, but again we have another gap, so we might have to come back and fill that, which it's incredibly irritating, as it's just been doing this for weeks. So I haven't been trading natural gas either. I'm just waiting on this. But if you take a look at the ETFs, this is the leverage short ETF for natural gas, KOLD. It's in a very clear like wedge kind of pattern. I would have liked this top to be a little steeper, but that's not the case. So we're breaking down to the underside. You have a gap down here, which is right at the golden pocket as well. So I would definitely expect more downside from this. I mean, it might need a bounce just because of that gap down here for this to fill, and then it keeps going. But this is unbelievable. Like, this just shouldn't work like this, where you just go from like 10 to 90 and then you just float up here forever. And at some point this is going to drop more, but it's done a fantastic job of just stalling and delaying. And this is a huge range. Like, that's like a 26% drop, and then you get a massive rally to go even higher. That's like 40% after running several hundred%, like 800%. So this thing is crazy volatile, but we should see a breakdown at some point. It would just be normal. That's just what it should do at some point in the future. So that would align with natural gas getting some sort of rally. There's a big gap up here that should fill at some point in the future. So keep your eye on natural gas going higher at some point. It might need that gap fill, but I think we should be looking at some sort of upside move in the coming weeks. It's just really going sideways like everything else. So on to the DXY, nothing has really changed. We finally got that breakout from the channel, although it's a little awkward just because normally when you break out of a channel, you like to see it kind of go up right away, and it did this weird like bouncing thing and then went sideways and then went up. So I'm not really sure what to say about it, but to keep it simple, if it breaks below those two lows, you're going to want to be looking for that region, and that's what I've been saying for the past 2 weeks. Nothing's changed. That's all I really need to say. But if that isn't the case, then you're definitely looking at some upside to move higher, probably into this region of congestion, and then above that we could go higher, back up to here, 10110, 10850 to test liquidity, but that's a little far away, so we're just going to focus on these lows, see if they hold or not. Apple, it's crazy just watching all of these things. Just they go up, they keep going up, but they do it at a really slow pace, and it's like this weird, like really slow, like sideways drifting upwards. So it's really hard to play the upside. You can't play the downside because it doesn't really go down, which it will at some point. But right now we're sitting at this volume node where there's a lot of sellers coming in, and the upside here would just be, I mean, I would be blown away if like you just start going up to higher highs, and if that's the case, I have no clue how high it's gonna go. It doesn't make sense to me. But my target has been 177. Since we were down here, we were looking for this gap to get filled, and then once we didn't break down from there, I started looking higher and saw that that could be the case. So I believe there's like a tiny, we already filled that gap. So all gaps are filled here, and now all that's left is just that Fibonacci extension target. So 177 is the level I'm watching, to hopefully see a breakdown from there, and there's a ton of downside. So Apple is one of the big ones. I'm looking for a big breakdown at some point in the future, easily back down to 150. Yeah, definitely. But at some point it's going to do it. It's just taking a long time and really burning shorts here. So you just kind of got to be careful with definitely not taking like short-term puts if you're trying to swing them. It's really important to give yourself time when you're in this kind of situation where it just does not drop. And Tesla, nothing's really changed with this one. So we're looking for that wave forward down to the downside. Now it broke above that high. Let me turn this off so it's a little less messy. So the wave forward criteria was that it couldn't go above 172, and it spiked above it, rejected off the 0.618. So this makes it a little more difficult to say, but what could be the case is that it's some kind of wedge, which just from a glance, this could definitely be an expanding wedge, which I'm not necessarily supporting here, but yeah, that's not exactly clear to me. So right now, I think it's just a good time to wait. If we do get down to here and fill that gap, which is what I've been targeting overall, and that lower one, that would definitely be preferred. And from there, we would just kind of evaluate. So everything is just in this situation where we just gotta wait for everything to play out for a more clear macro structure. And right now, I'm just not going to throw out like guesses for where the market's gonna go because that's just not how you should trade. You can't really trade on guesses. Um, they should at least be educated guesses, not like some kind of 50-50 gamble. That's just not the way at least I like to trade. That's just not how you can be a consistent trader. So learn how to be patient. That's what I've been doing for the past, really like the past entire month. Just letting the market figure itself out. Microsoft is another one I'm looking at for some sort of like nasty drop here, and everything is. I'm going to talk about Google, but everything is breaking these insane resistances. Um, like you can see that. I think this was earnings, right? Yeah, this was earnings. We had a massive gap up, and then it continued, and that was another gap. That was the gap we were looking at last week, which just got filled, and then above that, this is the next big resistance. You can see this volume node, so there's kind of a volume gap in this region where it's definitely having trouble. You can see this huge volume fall off right here, so it's going to be really difficult to get through this region, but if it does, it's just going to be this kind of a melt up right into the next area of supply where sellers are going to be waiting. That's like the last line of defense I see, and if you go higher than that, again, kind of like Apple, I don't really know what to tell you. So, um, what you want to do, you have divergences. That daily MACD is starting to cross down, which is very, very bearish. But like last time it did this, it popped right back up. But you had earnings, which is kind of like a chaos variable. So it's not looking good here. You filled that last gap that I was looking at. That's kind of my last target. So I don't know what's above this. It's just that, from what I can see, but it's not looking good. It's really not looking good. Rejecting that resistance again, curling down and starting to cross. Histogram went right today. So it's not looking bullish at all. And especially if you break back down into the region, you have a long way to come down. I'm talking like 260 to 250. So that's what I'd be looking at if this does start to break back down into here and goes through. So that's another one I'm looking at for a big drop. Same thing with Google. Very interesting. You broke a huge resistance line, very significant one. So you can see you were consolidating at the tops, and then you broke through, and then, uh, yeah, I mean, I wasn't expecting this, but you do have a gap right here, which everything is kind of like trying to fill these gaps that they had above. So you can see like Apple, this is just a smaller one, but everything is just kind of doing these huge melt ups to fill these last gaps that are left. So Google has that little gap left up there, as well as a big volume node, and above that, it just kind of falls off. So above that, I'm not really sure what to say. You got gaps up here, which just looks really far away, but uh, what can I say? This is the last line of defense. It's looking bearish right now. I think I was talking about Microsoft. Um, yeah, Microsoft. It's not looking great, and that could definitely kind of add some fuel to other stocks in the market like Google. So, which has divergences, pretty um, substantial ones. That MACD is not looking sustainable at all. So, Google, it's an interesting one. You broke a big resistance, you got that gap left, but yeah, I would definitely be watching for a tone down if we get up to here, which is not that far away. That's only like $4. So keep an eye on that one. Biotech, not really too much to say here. You add this big line. If you remember, we were talking about that big rally we were looking for. Once we were down here, we said it was for sure going to test this resistance, and then we had that gap to fill, and then from there we could see a bigger run up back into the range, and that's what we're getting. So we'll see. This should probably pull back soon. You're kind of at that in the middle of the range, so you could for sure see a pullback around here, and then we just kind of have to see what those crucial levels do, which is going to be 6. It's nothing's changed. It's still 660, and then like 6 on the dot pretty much. So we'll see what it does on the pullback. I don't. This is going to come down at some point. This is a pretty big rally. Like I think this is like 70-80%. 70%. So yeah, this should get some kind of relief soon, and we'll just see what it does. On to semiconductors, very interesting. SOXL is coming up to a pretty big trend line here that in the past has definitely had reactions. You got below it. Um, you can see what I'm talking about just from looking at it. So you're coming up to it. It's going to be interesting to see how we interact with it. You have gaps below, which I'm looking at to probably get filled in the future. And just kind of looking at the overall, quick thing about SOXS, we broke down above that range, or that kind of like level that we were looking at to hold, and it held a few times, and now it's breaking down. So if it wants to get back above, it has to do it pretty quickly. But if not, I think I'm looking at this trend line to get tested, and we'll see if it holds. If not, I would be absolutely blown away because this is based on semis like Nvidia and AMD, which just they don't stop going up. Like I don't know how long this can last for. Like I really don't know how long this can last for. Like that's a like near vertical move that just doesn't stop. So we'll see. We'll see. There's a lot of shorts in this market, and it's definitely unraveling. So we'll see what this does with that around that crucial level. Definitely had a breakdown, so we'll see if we get down to that trend line and if it holds. As for the overall, I think we still have both scenarios in play here. This could be an expanded flat, which is where the C wave goes higher than the start of it, and then the C wave goes below A. So that could be the case for this wave 4 here, which is right here. This is wave 4, and then 5, which takes it to 500. It would blow me away. Semis are already like just rocketing to the moon, and they already have. So that would blow me away. We just have to see if we come back down to this range, if we go below it, and if that's the case, there is some serious downside left. But if not, we might be moving up to 400. And there's some trend lines we have to test. This is that next resistance coming up. So again, this one you just kind of gotta watch. It's been in this range for a while, and it really relies on the semis like AMD and Nvidia. So we'll see what Nvidia does. Nvidia's gonna have a big drop at some point, but it's really taking its time. A lot of people have been shorting it on the way up. So we'll see. The VIX, very interesting. Not too much to say. It's almost looking like it wants to set up to just kind of spring to the upside. But it's just going sideways like everything else. Like I'm telling you, everything is going sideways in this market. And with some of these things, it's just like this sideways drift. Even oil and natural gas, nothing is really showing any direction. Except for it's like kind of like the blue chips, but again, it's just a slow, really slow upwards drift. And I'm going to talk about these two things here. So you got the Bollinger Band inside the Keltner channel, and it is very, very, very tight. The last time it was this tight here was back in 2021, late 2021. So that is a long time since it's been this tight, and volatility, it's going to explode at some point, and it's going to be like insane. I mean, this is unbelievable. Look at how much like supply we've built up right here. In the past, this was the biggest volume node, which I can just kind of show you quick. We can go back to, let's go back to. So, yeah, it was like almost non-existent, and we're just gonna play this so you can kind of see how it plays out. You can just see how we've been trading up in this region so much that this volume node just starts to build up as the longer we trade within it. And look at this. It used like this. It wasn't even a volume node back here, and now it's the biggest one. So it's a really interesting spot. If you get above it, there's just kind of a big volume gap all the way up to the 430s, which is that area I'm targeting to the upside. And then to the downside, definitely under 400. I would like to see this trend line. Let me take this off so it's a little more clear. Yeah, it's a very, very interesting market. You got so many people betting on like the biggest recession of all time. You have an insane amount of people shorting treasuries, which I'm going to show you quick. And just before that, look at how many bankruptcy filings are like happening this year. Like we haven't seen this kind of thing since 2010. So you have all these companies just absolutely falling apart. You have all these people shorting treasuries. Um, like, just look for yourself. This is insane. More than COVID. Um, and the whole market is going haywire right now. There's no other way to put it. I just it's crazy. This hasn't really happened before, and I think a big thing has to do with how much retail participation there is. And that just kind of adding to like how many bets there are on each side, and people are definitely shorting this, betting on like some sort of insane crash to new lows and everything. And if too many people are short, it just makes it so much harder to fall and crash. Um, so that's the case for the upside. So as long as we trade in this range, it's an extremely tight range. Like this is like less than $10 or something, or like a $10 range. I don't know. You can see it for yourself here, but it's an interesting market. I really don't have anything else to say than that. Um, you got this big volume gap under here, so if you break through here, it's kind of like a straight drop to 390, and if you break above, it's kind of the same thing. Volume gap up to kind of like the 430s. So that's all I got for this video. That's where I'm going to leave it. If you watched the whole thing through, make sure to show it some love, give it a like and subscribe, and peace out.